Hello, this is Danielle with Upscale Bookkeeping, and we have another Hot Tip Tuesday. In today's video, I'm going to show you the very basics of your financial statements so that you have a good foundation on how to read them on your own when you are pulling them. So for starters, I am inside of QuickBooks Sample Company, so you are not going to be reviewing any real client data. And then I am currently inside of Business View here inside of QuickBooks Online. So you can see that here. So once more, to get to your reports, we're going to go to Business Overview and select Reports. We are going to review the balance sheet first. So when you're looking at the balance sheet, as I said in prior videos, the balance sheet is a running statement. So it begins with the very first transaction your company has ever conducted, and it continues to build up to the date range that you are reviewing. For the sake of this video, I am reviewing on March 30th, so I am going to show you this sample balance sheet on this day, March 30th. So when you're looking at the balance sheet, it's going to show you three things. It's going to show you what you own in terms of assets, what you owe in terms of liabilities, and it's going to show your equity, which is essentially going to be how much you have left in the company or what is the company worth. So the asset section is going to be shown at the top, the liability section comes next, and then the equity section comes last. So when you're looking at the asset section, it's typically going to break this down into a couple different sections. So you're going to see all of your current assets at the top, and then you'll see your fixed assets or your long-term assets at the bottom. So your current assets are going to include your accounts receivables. It's going to show all of your bank accounts and then your inventory, any undeposited checks that you maybe hold on to. So when you're looking at current assets, you're really essentially thinking of assets that are expected to change within the next 365 days. The next is going to be your fixed assets. That's going to be the bottom section of the assets. And those are typically going to be assets that are not expected to fluctuate in value within the next 365 days. So you're going to see your computer equipment here. You're going to see any warehouses that you may own here, and so forth. So for assets, that's going to be at this top section. If you go down, you're going to see your liabilities. This is money that you owe to other people. So if you're wanting to know how much debt your company has racked up, this is going to be the section that you are looking at. And very similar to the asset section, it's broken down into your current liabilities and your fixed liabilities. So liabilities that are expected to fluctuate in the next 365 days, and then fixed or long-term liabilities are not expected to change too much. So when you're looking at your current liabilities, you're going to see your credit cards here, all of your immediate payroll, for example, if you have not paid your employees yet. And then you're also going to see, for example, sales tax that may have been collected but has not been remitted yet. Long-term liabilities are going to be, for example, long-term loans that you've taken out. So if you've taken out like $100,000 loan for the business, you're likely not going to pay that $100,000 back in the next 365 days. So that's going to sit in the long-term liabilities section. The last section of the balance sheet is going to be your equity section down here. And depending on your organizational structure, this can look very different. So I am just going to review this for a sole proprietor or a single member LLC. So the equity section is typically going to show your net income, which is going to be the number pulled directly from the income statement for the current year. And then you're going to have your owner's equity, which sometimes is going to be sitting in retained earnings because that's just how QuickBooks has set things up. And then you're going to show both your owner draw and then your owner investment. And that usually is ran on a yearly basis as well before it's closed to owner equity. But right now you're just seeing your owner equity. Here you have an opening balance entry, and then you're going to have your income statement value sitting in the equity section as well. So that's going to give you what that total equity is. For the sample company, they are currently owing more than they have, so their equity is negative. Okay, so moving to the income statement. The income statement is the one that you are likely most familiar with, as most businesses want to know if they're making a profit. But your income statement is a yearly statement. So if you are on a calendar year, it runs from January 1st through December 31st. And this is broken down for us e-com businesses into 3 sections. So you're going to have your income up top, which is all of your gross sales. You're going to have your cost of goods sold coming next, which is going to be the cost of product that you had sold. Your merchant fees are going to be sitting in here. Any subscription fees for your websites will be sitting in here. And then as well as your shipping and freight. So your cost of goods sold, that will after give you a gross profit down here. This is going to be the gross amount of profit that you made before your operational expenses. And then it's going to show your expenses. So these are all of your operating expenses down below. So if you have rent or lease, if you have your bookkeeper that you're paying for, your office expenses, your digital services, your office supplies, all of that is going to be sitting in your operational expense section down below. So after we go through all of your operational expenses, you're going to come out to either a net, you're either going to come out with a profit or a loss, which is going to be your net income, and that's going to show at this number at the very bottom down below. Okay, so the last report that we are going to briefly review is your statement of cash flows. And as I said before, the statement of cash flows is often a forgotten statement to review, but it's very important because it shows what your cash flow is in the business for any period of time. So the statement of cash flows, we're going to review this from January 1st to March 30th. The statement of cash flows is broken down into 3 major headers. You're going to have your operating activities up top, you're going to have your investing activities, and then you're going to have your financing activities. What it's going to show you is how much money you started with in liquid cash at the beginning of the month. It's going to show all of the sales that came into that cash, all of the expenses that came out of that cash, and then it's going to give you what your net cash flow was at the end of the month. So when we're looking at this, you're going to have adjustments to reconcile net income. This is going to show all of the activity that is coming in and out for the operating activities. This is going to be your income statement. You're going to have your investing activities. This is the change in net cash per the balance sheet. And then you're going to have the financing activities. This is going to be the change in net cash per the equity section of the balance sheet. All right, that is how you read your financial statements at the most basic level. I recommend you go into your QuickBooks Online right now and practice this on your own so that you can review these financial statements whenever you want. Have a wonderful day.